Hey there, Alfuego here, and thank you for coming back to the channel today. If you've ever asked yourself the question, should my investment strategy be focused on dividend stocks or growth stock investing, then this is the video for you. Alfuego here, thank you for coming back to the channel. I greatly appreciate your support. If you haven't already, hit that like button, subscribe button. Let's talk about this. First, let's recap on just what a growth stock investment strategy is. It's an investment strategy where your primary focus on what you buy, on the companies that you buy, or the stocks that you purchase, are focused on valuation growth. That the company is going to grow in value over time, that you buy at a $10 valuation per share of the company, and that company is going to grow from $10 to $20 to $50 to $100 by the time you're willing to sell the company off. That your intent is to receive an outsized return on your investment based on the stock price of the company when you liquidate the company. While a dividend stock investment strategy is focused on buying stocks that already pay you dividends, so that you get a cash flow in the short term, in the interim, while you wait for the time to be able to or willing to sell that company, if you ever sell the company at all. Because that company potentially could cash flow your entire life if you want to, if you have a high enough position in it, a large enough position in it, and they pay you a high enough dividend every single year. You could very realistically live off of dividend stocks if you have enough money invested into it. Those are the two different kind of strategies. Those are two different kind of investments, growth stock and dividend stocks. Which one should you do? Well, I actually would probably consider and say that the answer should be you should do a bit of both. Depending on your time horizon, what you're looking at doing with your investments, when you're trying to retire, when you're trying to live off your investments, or what you want to do with your investments, that should dictate how you invest and your strategy in which you should invest in or invest with. If you have a long-term horizon, then really I do think you should focus on a growth stock dividend investment strategy. Companies that are paying some dividends, even if they're small dividends, yet they still have a high potential and room to grow. Or companies that are have a low dividend payout, but they are routinely paying out their routinely growing their dividend a large amount every single year. There's a lot of growth potential on the actual dividend payout itself. Plus, some companies have a large growth potential on the valuation of the company themselves. Those are the companies I think you should look at and try to focus on and find when you're considering your long-term investment strategy. If you have a long time horizon, I'm talking 15, 20, 25, maybe even 30-year horizon out there, to let those stocks appreciate, get that compounding growth effect happening on that dividend growth when they do grow their dividends. Because some companies will grow their dividend payout 15, 20% year over year over year. That's a massive amount of growth that you're going to compound into your dividend yield that you're getting with the company. Because if they're paying out $1 a share this year, but they grow 20%, they're going to pay out $1.20 next year. They do it again, they're paying out another 20% on top of that $1.20, and they're just going to keep growing and stacking and building up that cash flow that you are getting every single year for just one single solitary investment into the company. That's the beautiful part of dividend investing, when you're getting a dividend company who grows their dividend every single year. On the flip side, if you're actually getting a company that has growth in their valuation as well, then you can potentially cut off the top that company when they grow up to be a certain amount of your portfolio. If they get to be out proportional size of your portfolio, when they outweigh the rest of your stuff too much, cut a chunk off the top, reinvest that money down below somewhere else at another company that's growing, and it will actually grow your portfolio largely in an exponential fashion, not just from that dividend payment, but also from the growth of the valuation of that company as well. So the answer to the question, I think you should do both. You should have a combination of both dividend stock investing and growth stock investing, but really it should be companies that have growth potential that also pay out a dividend, and companies that have growth potential on the dividends they pay out. And to really encapsulate and understand this entire concept so that you can apply it to your strategy the best, you really actually need to understand what total returns are, where your investment journey and your stock journey. And to understand that, I've dived into it and broke it down and simplified the concept in a video that's done right here. So go check it out, and I'll see you on that video, and we'll understand what total returns are.